All right, I'm going to start off the weekend report and look at energy. I haven't been willing to trade energy for a long time, but that may be changing. We've got one of these big volume spikes in the energy shares. Um, as you know, sometimes I can use this indicator to will tell me when we've got a bottom in the metals. We'll get a big volume spike in the what used to be the triple leverage funds, JNUG and Nugget. They're now double leveraged, and so we've got this big volume spike here, and this is the double leveraged fund. You can see what about 3 times normal volume here on this. So I'm assuming this is a breakaway gap. So I think you can start putting a little money in the energy sector, and I guess I would suggest sticking with the energy shares here. Either the XLE would be unleveraged, and the ERX would be leveraged if you are willing to take on that extra volatility of a leveraged fund. All right, moving on to stocks. The first thing I want to note is we got our yearly cycle low, and of course, this was also a 4-year cycle low back here in March. We should probably expect the next yearly cycle low is going to come in the same time frame, March or April. So we've wasted one daily cycle with a double bottom. We're now in the second daily cycle. It's possible we get a breakout here. The one thing that's making me cautious is that I'm worried that some of the states are going to start to lock down again. And if a few start to do that, then I could see more and more states following suit. Even though none of these lockdowns and masks, they didn't stop the virus the first time. It's not going to stop the virus the second time either. But this is just what politicians do. They make bad decisions, and then when they don't pan out, they just double down and do the same thing over again. So at the moment, I think the market is happy that we've got what appears to be a split. It looks like the Republicans are going to keep the Senate, and that's going to prevent any kind of radical changes taking place. Although I think we're going to know the results of the runoff in Georgia maybe in January. So that would be assuming that we don't have a bunch of states start to close down again. Then that might be a spot where we could top and roll over would be in January if the Republicans lose the Senate. That would probably mean we're going to have much higher tax rates. And if the market starts to anticipate that we're going to lose the Senate, then you may see a lot of selling here into the holidays as people try and take profits while the capital gains rates are still low. So a couple of things that make me a bit cautious in stocks. I'll put it that way. So just I guess at this point just honor that stop in the SOXX. It's not very far below us. We're not going to lose very much if that stop gets hit. But at this point, I would play this under the assumption the second daily cycle is going to right translate, unless we start to get a bunch of states locking down again, and then if I know Biden promised, assuming he does become the president, he's promised not to lock down the country. But if he takes office and there's public pressure and we're getting a lot of cases or a lot of deaths again, he'll go back on that promise in the blink of an eye. Again, that's just what politicians do. And if he does that, then we're going to have another market crash. And I would say that at that point that would probably turn this into a 4-year cycle top, and we'll have another secular bear market. The country cannot survive another lockdown. Let's be clear on that. We've got so many small businesses that are just barely hanging on. Another lockdown will push them all over the edge, and we'll start almost certainly we'll start another a huge depression that'll probably last into 22. So a bit cautious with stocks, but we got our stop is pretty close. So at this point, I'm going to assume that this second daily cycle will right translate, and if something happens to tell us otherwise, then our stop will presumably get hit pretty quickly, and we won't lose much money, and we can get out and get back on the sidelines. So metals is where I think the real potential is at. Unfortunately, we're just still caught in this, grinding sideways churn, and it's frustrating people. It's the same thing that happened here. Everybody got frustrated. To some extent, same thing here. People got frustrated. Typically, the metals will have a history of bottoming in late November, early to mid-December. At this point, I'm going to assume that this is a new daily cycle and that it's going to run a normal duration, and we're probably going to get a bottom somewhere in the first or second week of December. If something happens to tell me otherwise, then I'll just have to make that adjustment. I'm not going to be able to call an early bottom. That's just not the way cycles work. But I mean, there's definitely a possibility that we could not undercut this. And if that happens, then I'm going to miss the first part of this rally, because at this point I'm going to I want to see us break out of this flag pattern, or at the very least we need to close above the 10-week moving average. All right, so here's the weekly chart. You can see last week's move back above the 10-week has been rejected. There's nothing that looks particularly bullish about this to me yet. I'm going to at least, if I'm going to assume a 7-day cycle, then I'm going to at least need to see the miners close back above the 10-day moving average before I'm ready to get bullish again. The same thing holds for gold. We were not able to hold that close above the 10-day moving average last week. We're back below it here this week. So at this point, I think the potential is largest in the metals, but we're just going to have some patience and wait for this sideways churn to finish. As I said, I'm assuming it's probably going to come in December. Now, if we can reverse everything and close back above the 10-week moving average next week, I may be willing to give it another shot. But I think this is where the most potential lies. Let me widen this chart. All right. Eventually we're going to break out of this, and I think this flag is occurring at roughly a halfway point, and that the next intermediate cycle by the summer of 21 is going to test these all-time highs here. So I think this is where the most potential lies. And once we knock off enough people with this frustrating sideways to downwards grind, then we're going to, it's going to set up a very profitable trade for the first half of next year. And as some of you know, I manage a couple of accounts for a few friends. I'm just not confident enough in the stock market to take any big positions in that area with any of those accounts. So I am just waiting 100% in cash. I'm waiting for another sign that this flag is done and we're ready to start the next phase. And when it is, then I'm going to put on positions to take advantage of what I think is going to be the best trade of the first half of 2021. So I think miners have the potential to come up here and test these all-time highs, and I think silver has the potential to hit $50. As it stands, I don't know that I'm going to be able to pick a bottom in this unless we get a daily cycle that runs a normal duration and we get a lower low in early December. If that were to happen, then I think I could probably get pretty close to getting us in at an exact bottom. But if we get some kind of weird 7-day cycle here, and let me go back to the daily. All right, so if this turns out to be some kind of really weird 7-day cycle and we don't come down and make a lower low, then I'm going to miss this part of the rally until we break out of this flag again, because I'm at this point I'm assuming that we're still every rally is a fake out, and we've got lower lows still ahead of us. That's my assumption. My assumption is for a normal duration daily cycle, 7 days is not normal. So my assumption at this point is that we're going to have to wait till December to get our final bottom. And at that point, then I think we're set up for the best trade of the first half of 2021. If I'm wrong and we recover and we get back above here, which we could do if the dollar breaks down and we break out of this flag, then I'm going to miss this because at this point I'm assuming that these are all fake out rallies just like all the rest of these, and our bottom is going to come in a normal timing band for a daily cycle low. But that may not happen if the dollar rolls over. So however this plays out, I think this is where the most potential is. This is what I'm waiting for in all of the accounts I manage. I'm waiting for some signal that this is over because I think this is setting up the best trade of at least the first half of 2021. Maybe the second half of 2021 would be coming out of that March, April bottom in the stock market. But I think the first part of the year is going to be for the metals. And I just want to be patient and wait for it.